Hello everyone, I'm Shekhar from Momentum Lab. Today is 15th of October 2024. So far, we have completed 197 days of building the momentum strategy in public. And in this 197 days, the portfolio moved by 21.32%. In terms of NAV, we are at 120.79. And these returns are inclusive of all taxes, realized or unrealized gains, and also taking into consideration the dividend. So this is inclusive of everything that we have accounted for. And if you compare this with the Nifty 200 index, which is our universe, from this universe of Nifty 200, I pick the top 15 stocks based on momentum and run the strategy. The Nifty 200 has moved by 114.5, meaning 14.5%. So there's an alpha of positive 6.29% at this point of time. This is a dramatic change in the last 15 days. When we did a September month review during the early October, we were at -1 or -1.5 alpha. And in this 14 days, have played a very significant role in making this transition from negative territory to positive territory. So let's see what are the stocks that have contributed to such stellar growth. So the first stock that made this possible was CG Power. So CG Power in our portfolio was languishing for a lot of time, making sideways movement, and it underwent this volatility contraction pattern again, and it made a move of 22% in just 5 trading sessions. So this was one of the stock that pulled our portfolio significantly. And the other stock that made very good progress was Siemens. This also made a move of 13% in the last 1 week. And we also had Dixon, which did really well. This also, I think, I believe, made a move of 14.5%. These were some of the stocks that had really pulled the portfolio. The other stocks didn't fall by much and also didn't go up by that much and stayed more or less in a similar range. Trend also did relatively well. It moved around 13%. So in overall, we saw that these 5, 6 stocks have made the heavy lifting in pulling the NAV up as compared to the Nifty 200 index. So if you do this comparison, the blue colored chart is the NAV of my strategy versus the red colored one, which is of Nifty 200. I'm sorry. We see that in the last 1 week, significant difference is visible between the strategy and the Nifty 200. Let's see how this continues. Because whenever we saw that our strategy outperformed, it quickly resulted in coming back and falling to the Nifty 200. And that's how it has been once, twice, and thrice. Hopefully, now we break away from Nifty 200 and move into a higher territory. That's what we are hoping for. And let's see. That's the strategy's performance so far in the last 197 days. The drawdowns also have slowly started to decrease. The drawdowns were severe, especially during the election season and during the budget season. But now the drawdowns have come into manageable levels of 5% falls here and there. And in last 1 or 2 weeks, in fact, the drawdowns also have reduced. Mostly it was an upward journey that we have seen. And this is also accompanied by a good uplift in the worst case loss. If more and more stocks make all-time highs, then what happens is that the worst case scenario for me reduces, meaning I exit stocks when they fall by 20% from its 52-week high. If more and more stocks are making new highs, then the worst case loss for me will shrink and I end up getting profit. Meaning, if let's say in the worst case, all the stocks fall tomorrow by 20% from its 52-week high, and still I end up getting some profit in the strategy. So that's how I define as worst case loss. This can also be seen in the portfolio heat. If the portfolio heat is negative, it means that I have additional ability to take more risk, or it also means that I'm sitting in profits. So I take a very keen look at this number also, so that I am gauging whether to add more money or not. Now, right now, there are vacancies in my portfolio to add 3 stocks because we did exit a couple of stocks in the last 1 month. So these 3 stocks will be filling up. And also, there is one stock which is getting exited, which is JSW Energy. So I have already run the screener for this month. So in the list, JSW Energy is missing. So instead of JSW Energy, we'll have to pick one more stock. And since anyhow three stocks are vacant, so total there are four stocks that we need to pick. And when I pick stocks, I'll start from the top and see which are the top four ones. So the first stock that I'm going to pick is BSE, Bombay Stock Exchange. The second one is Oracle Financial Services. Third one is Mahindra and Mahindra. Fourth one is Solar Industries. The remaining stocks are already in my portfolio. So these four stocks will make an entry into my portfolio, and the remaining stocks are within the top 45 ranking. So the exit criteria for my strategy is if the stocks which I'm already holding are below 45 rank in terms of past 6 and 12-month momentum, then I exit. So that's it about the stocks that are entering into my portfolio and the stocks which are getting exited. The overall XIR as of now is at 36%. This number is right now meaningless. Let's wait for 1 year and see where this number ends up at. Couple of good stocks which are in my portfolio are Trent and Dixon. Undoubtedly, they are sitting around 58% profits. The next decent ones are Siemens, Kalyan Jewelers, and CG Power, around 30%. The next best ones are Vedanta Limited and Motherson Sumi at 20% each, and then comes Cummins India at 14%. The only one stock which is not doing well is GSW Energy at -6%, which is getting kicked out. Suzlon and Prestige are yet to make their mark on the portfolio. Even Zomato, it is just at 8%. That's it about the portfolio. And let's see the low wall strategy. Now, in low wall strategy, it is very simple. I equally allocate between momentum and low wall. For momentum, I chose Nifty 200 momentum 30, and for low wall, I chose Nifty 100 low wall 30. I'm doing a weekly flip on these strategy, equally allocating between momentum and low wall. Over the last 2 months, the blue color line, which is the strategy of low wall plus momentum combination, is way above the Nifty 50. And if you see the NAV of the strategies, it's at 102.13, whereas Nifty 50, it is at 99.42, meaning we have an alpha of 2.71. So that is it about the multi-factor strategy. And we'll be continuing the SIP till a sizable corpus is made in this portfolio, and then we'll stop adding more money to the multi-factor strategy and then see uh, whether to continue with the same equated momentum or low wall, or should we do momentum low wall with dual momentum with gold or not. Right now, I'm just planning to hold or do a buy and hold strategy of momentum plus low wall combination. And with respect to the momentum strategy, right now I'm using the Nifty 200 as a universe, but eventually I'll move to Nifty 500, not right now. Then when I move to Nifty 500, I also want to increase the number of stocks that I hold. Right now I'm holding 15. I want to increase it to 25 or 30. And obviously, if I have to increase it to 25 or 30, I'll be needing additional capital. So whenever the additional capital is made available and the time is right, I'll move to Nifty 500 switch, and I'll be keeping you guys updated whenever I make the switch to Nifty 500. So that is it about the portfolios. Let's take a quick look at the charts. Like I mentioned, CG Power was really good, and this is right now making a tight flag in this range after a very long consolidation. Vedanta Limited also is really good. I've been talking about this since long. Now it has made an all-time high and now resting at 21-day moving average. JSW Energy is getting picked out. Motherson Sumi also is looking good. It has made a cup and handle pattern, or you can also call it as VCP. Trent is also making a very tight consolidation at all-time high levels. Suzlon is resting at its 50-day moving average. Zomato was again resting at its 21-day moving average. Not bad either. Cummins India looks worrisome. It is almost at its 200-day moving average. Let's see how it goes further. And if we take a look, its place from the 52-week high, it is right now at 12.5%. That's okay. Still decent way, decent enough coverage is there. Kalyan Jeweler is trading at its all-time high. Dixon is also trading at its all-time high. Siemens also is now ready to touch its all-time high. Prestige also is making its base formation. So technically, there is very good patterns in our stocks. We don't take into consideration the technical charts while preparing this momentum strategy. Momentum strategy is independent of these technicals or fundamental. It just follows price and price alone. The reason I see technical is just to get some kind of reassurance or just like a itch that I have to see how they are doing well. But I do not take any action based on technicals. It is only for my knowledge, or maybe if there are some great trading ideas to do some additional bets instead of this uh, systematic trading that I have. If there are some good setups that are forming up, I'll take some small bets out of this system to trade them. That's the only purpose. And if you look at the overall markets, the Nifty 200, if you look at it, is right now in sandwiched between 21-day EMA and 50-day EMA, which is contradictory to our momentum strategy. When the Nifty 200 did well, our strategy was not overpowering the Nifty 200. But when Nifty 200 was correcting in the last 1 week, our strategy did really well. So let's see how the rest of the October month pans out and make a better decision out of it. And if we look at the sectors which are mid cap, small cap, and below, especially micro cap, these sectors or these market caps look really good. The closing is in green, and they're well positioned about 21-day EMA, and they've made solid green candles with proper closing. Whereas in the large cap space of Nifty 50 or Nifty Junior and 200, they are getting sandwiched or taking rest and are at 50-day moving average. So that's it about the major market caps. We'll catch up again in another video. That's all from my side, guys. Have a nice day. Bye.